Welcome to the Cyber Risk Management Podcast. Our mission is to help executives thrive as cyber risk managers. Your hosts are Kip Boyle, CEO of Cyber Risk Opportunities, and Jake Bernstein, Cybersecurity Counsel at the law firm of Newman DuWors. Visit them at cyberriskopportunities.com and newmanlaw.com.
So, Kip, what are we going to talk about today?
Jake, today we're going to take a closer look at how cyber liability insurance works as part of an overall cyber risk management plan, and we're going to do that with the help of a guest.
Oh, a guest. So who's our guest today?
All right, our guest is Chris Brumfield, and Chris helps companies understand how cyber insurance and managing risk are part of an overall plan. He's a consulting broker, an insurance specialist, and a public speaker, and he's with the firm Brown & Brown of Washington State. Chris, welcome to our podcast.
Thanks. It's great to be here.
So, Chris, on this show, Kip and I have been saying that companies need to include cyber insurance as part of their approach to overall cyber risk management. Do you agree with that?
Yeah, definitely. And not just because I'm in insurance sales, but
yeah, I'll bet.
No. So cyber insurance, basically it transfers the risk, the financial risk that a company is going to have, and it transfers that to an insurer. You pay the money and they take on that risk. There's over 140 cyber insurers that we look through to choose the best fit. And when it comes down to it, not all insurance carriers are equal. So that it just really
140. I had no idea that the number was that high. I would have guessed maybe 40.
That would be a pretty good guess. No, everyone and their mother is excited to offer cyber insurance at this point. And also just for the uninitiated, as a broker, we're a middleman essentially. So we work for our clients, not for an insurance company. So we can.
So Chris, as a broker, and given the 140 plus cyber, what trends are you seeing, for example, in coverage or claims?
Well, the most recent is going to be, I try to stay away from acronyms, but there's the GDPR, which is called the General Data Privacy Regulation. That's for the European Union. And then the CCPA, which is the California Consumer Privacy Act. And those are some of the newer regulations in Europe. It revolves around data privacy. And then the California Consumer Privacy Act is a statutory damages of $100 to $700 without proving a loss. And the trends we're seeing is some insurers are not paying attention to that or not making changes, but other insurers are being very proactive and they're already writing that into their policy. So these new emerging threats to the financial risk of a company based on their cyber risk is now being written into coverage as we speak.
Interesting. So one thing that we've been kind of curious about is cyber claims being denied due to war exclusion clauses. So, how does that come up? Well, I think a good example is back in October of last year, 2018, the international food and beverage company Mondelez International sued its insurer Zurich American Insurance Company for about $100 million for declining coverage to Mondelez following the NotPetya cyber attack. Now, they had an all-risk property insurance policy, and Zurich decided to deny that claim by invoking the hostile or warlike act exclusion. So even though this case is before the courts still, what are you seeing about that? And then secondly, the very public DLA Piper law firm, they're multinational, they're huge. They were also hit by NotPetya, and they were closed down for almost 5 days, I believe. And they're now in a dispute with its insurer, Hiscox. And what we're seeing is that the insurance company is declining to cover for NotPetya. So, and that insurer is citing the war exclusion as reason for non-payment. What do you think about these trends?
Yeah, what's going on?
Well, those are with those headlines coming out coming out, the first thing that that drew my attention in right away, saying how are they justifying excluding coverage if it should be there? But when I dug a little deeper, because of course we stay abreast of these developments and trends, found that these are property forms, and so you can get insurance for just about anything. You can, Beyonce insures her legs or her voice. You have insurance for your auto. You have insurance for your home. You have life insurance for your own life. Each of these coverages, each of these insurance forms are specifically tailored for the risks that they're insuring. Just like your home policy covers your home in case there's a fire, property policies cover business in case there's a fire, there's water damage. And they typically will exclude the coverages that you can purchase elsewhere. They don't want to double down and provide extra insurance when it was never intended for that in the first place. And both of those, the Mondelez as well as the DLA Piper claims, those were on property. If I'm recalling right, both were on property forms. And so those are meant to cover your building and your operations, from slip and falls, from fires, from water damage, for explosions, real physical damages. They're not meant to cover for cyber. And if occasionally some small cyber coverage will be thrown in, but it's not something that is designed for that. That's why they have cyber policies. They're specifically designed for the risks that you're going to have in this digital age.
So I'm sure that that these companies are, we know they're large, we suspect they're sophisticated. How in the world could they have overlooked this? This seems like a major mess up in terms of risk management.
I can tell you, I would not want to be the person having to explain why I didn't want to purchase a cyber policy and justify that to the other shareholders or stockholders. That's not a conversation I'd want to have. It's something that's seen almost bury your head in the sand or sort of ignore the problem and hope it goes away, which we're seeing is at least not the case in terms of the trends we're seeing. It's not just the large companies anymore. It's also the mid to small companies that are being targeted by more sophisticated cyber criminals, and they do so because the organizations are less sophisticated, and they're more likely to pay a ransom or to give away information that would otherwise come back to haunt them.
Yeah. So, Chris, one of the reasons why Jake and I invited you to come on the program is because of these kinds of headlines right now, where as a risk manager in an organization, whether I'm the the chief risk officer or whether I'm just another executive in the C-suite, I might be thinking based on reading these headlines like, cyber insurance. What an unnecessary expense, because look, it's not covering the things that it claims to cover, and I don't even know where to go to purchase a policy. I have no idea if I'm going to be spending the right amount of money for the coverages I get and all these exclusions, and it can seem super daunting. And for our customers, we've been recommending, hey, you should go work with a broker. Don't go directly to the carriers, because the policies are so non-standard. It's really, really difficult to compare. It's not like buying automobile insurance, because that's fairly standardized. Once you select the right coverages, then you can shop on price. But our perception has been that buying a cyber liability policy is actually really, really hard. Is that still what you guys are seeing, Chris?
Yeah, it is. There's sort of hard to see it's hard to see through the jungle out there. The 140 cyber insurers, there's no real substitute for just taking the time and the attention to detail. We go through line by line, and of course, we suggest finding a good broker. Of course, we love to help people, but finding a broker who's actually going to take the time to go through each policy line by line to determine what coverages are there and what aren't. Like war exclusions, those are every policy that I've encountered in the cyber realm does have a war exclusion, but you have to know the insurer that you're working with and their dedication and their commitment to their space, as well as their claims handling and what they're going to do when a claim actually occurs. Because, let's say the WannaCry or the NotPetya, both of those could be, they could try to exclude them based on a war. Well, this was an act of a nation state. This was an act of war. However, the insurers that the short list we've come down to out of that 140, well, they do have cyber extortion coverage, and that is cyber extortion. So, with a gray area, if an insurer is doing things right, a gray area is going to be something that they use for the insured's favor, and that's where your broker is really going to be able to get in there and get into the weeds and understand the reputation, understand the policy, the forms, and all of the coverages line by line to know exactly, to be able to articulate to you as a client exactly what you're getting. And are you spending too much money or not enough money? Well, they should also be able to go out to the market and find those verifiable, reputable insurers and be able to say, well, we're going to benchmark and we can tell you this is where the highest came in, this is where the lowest came in, and this is right in the middle, and these are the reasons we think this firm is a better firm than the others.
Now that's another point in your favor, which is the idea that you guys are not just looking at the proposals, right, for the coverage, but you actually have insight into the way that these different carriers process claims, right? So you can actually bring that into the picture for somebody to help them evaluate between two coverages. That I think that's really, really helpful. Chris, this is so interesting. I want to ask you a completely different question, but how did you how did you get to this point in your career? What an interesting job you have.
Well, I don't know if a lot of people would describe insurance as interesting, but thank you. That's very gracious.
Well, it's interesting because it's a mashup of insurance and computers, right? I mean, that's kind of what you do. You kind of live at that intersection, don't you?
Yeah. I think it all started, if I have to go back to my origin story, middle school, I was building computers, my own computers from scratch. And
wait, is there a radioactive spider somewhere in this story?
I wish. That would be fantastic. And just imagine cleaning those upper windows for my wife when she asked me to clean around the house. Not trying to date myself, but the first computer I built was pretty sweet. A 333 megahertz processor, my first build, which was just screaming fast at the time. But over the course of the last 11 years, I just really became sort of not enamored, but just very interested with insurance and started just learning everything I could learn, everything I could get my hands on, and working toward designations to do that nearly nonstop over the last 11 years. And at my last count, I sort of lost count. It's like alphabet soup after my name, but 7 designations. And my wife would definitely agree. I'm an insurance geek. So basically, I'm not allowed to talk at parties anymore.
Well, you're in good company, right? Because you got 2 other nerds here as well, a legal nerd and a cyber nerd. So, welcome to the club. Happy to have you.
It's good to be here. Good to be part of the club.
Yeah, and some of us are legal and cyber nerds.
Ooh.
That's true. And then you get weirdos like me where I stand at the intersection between, cyber and business, right? So we're all standing at a crossroad here and being very nerdy and letting everybody hear.
Well, I think you guys actually might have me trumped, which is hard to find in my everyday.
Okay, so you started out, working with computers and actually building computers, which is great. And then you got bit by the insurance bug, not radioactive spider. Okay, and so right. So now I love your story because it just says a lot about your kind of your intense focus on what you do. And when you were describing earlier about, hey, we have to read these, policies line by line. Well, now I'm sure that you do that. You're not just saying that you do that.
No, I've spent more time reading insurance policies and contracts than, I would say at this point, hundreds, which if you've ever tried to read through an insurance policy, will understand that the sort of the pain that goes into that. But yeah, it just sort of goes back to honing, the view that I take in honing. You have to hone your craft. Whatever you do, you need to do it well. You need to do it at the top of your ability. And and that's whether it's getting an associate in reinsurance or claims management or my CPCU, which is a chartered property casualty underwriter. It's sort of like a master's for insurance. God bless you, because
if we lived in a controlled economy and somebody told me that this was going to be my job, I would really struggle with that.
I was just lucky happenstance. Yeah.
Well, it sounds like it's a good fit for you, and I think it's great. So, thanks for giving us a little bit of peek into your background.
Absolutely.
Yeah. So, I want to make sure that we're all on the same page here in terms of the cost of a cyber breach of some kind. And, if you start adding up the hours of digital forensics, network downtime, notification costs, recovery operations, staff hours, lost productivity time in the case of DLA Piper. Let's take a look at this. And there was this 2018 Net Diligence cyber claims study, and that study showed that 49%, so we're talking half really, were filed by companies under 50 million in annual revenue. Now,
I think that's going to shock some of our listeners.
It shocks me, and I'm listening. So there you go. It does. It's shocking. Now, what's also interesting is that the average claim by a large company across all industries was $8.8 million. So right away, you see that the cost can get astronomical. And then I think what's really interesting is to break down the average amount spent on three different types of services: crisis services, 307,000, legal defense, 106,000, and then legal settlement, 224,000. So, Chris, what is the link between insurance and managing these costs?
Well, that's going to be the insurance policies are going to be designed to cover those costs. I mean, it just when it gets down to it, when it gets down to it, the crisis services, the legal defense, and legal settlement. If you look at the average amount, typically, cyber policy is going to have $1 million limit, $1 million per claim with $1 million aggregate, and the aggregate means that's all you have in your bucket for the year. And all of those are covered under this because it's designed to key up as soon as you call to report a claim, to let them know what's happening. They're going to send their crisis response team or digitally send them. You're going to have asset restoration. You're going to have even PR help to help with your public relations to get your company's name out of the dirt, all the notifications. As well as all the legal costs, and then the digital forensics to get you up and running again after that. And that can include new hardware if your hardware has been bricked, where you have fancy paperweights for your hardware now.
So bricked means they don't work anymore, right? You can't turn them on.
Yeah, you can't turn them on, or you turn them on and you're locked out permanently. Bricked. So you basically just have a very expensive paperweight.
And usually many of them.
Yeah, many of them. Yeah, and if you have a larger network or any computer that's affected on your.
I remember reading about the Maersk debacle, and I believe they had to replace 35,000 bricked workstations and something like 3,000 or 4,000 bricked servers all at once.
Mm-hmm. That's a lot of bricks.
It is.
Let's build a cathedral.
Yeah. You could with that many. So in that case, you have the bricks. You have to figure out what to do with them. But no, it covers all of that, and as well as this system, any part of your system that's still up and running. You will have hackers that will gain access to a system, whether that's through social engineering or they're able to infiltrate by hacking, and they'll sit and they'll just watch and wait. And it can be a month, it can be 5 months. We've had a client, it was a year they've been sitting in their system and sort of spreading their tentacles. Well, when they first had the claim, they went in and they were able to fix what was wrong, but then they had the cyber policy covered for cyber forensics. And so they actually went in and they said, well, it's not just part one of your system, it's part 2, 3, and 4. If they only address the first part that was damaged or incapacitated, you'd still have that hacker lurking in these three other parts of the system?
I can't help but to think about termites in my home, right? That conceptually, this is
Mm-hmm.
so similar, right? So you get termites entering your home and they start munching away and you have no idea they're there, right? So they can do that for quite some time before you as the homeowner start to get the first idea that you've got a termite infestation. And then once you realize, you see the sawdust and you're like, "Oh my gosh." Well, you have no idea as a homeowner how much these termites have spread through your building. I mean, you've got to get a professional termite exterminator to come in, completely check out your building, and then figure out what's the game plan for getting rid of these termites. Does that sound similar to you, Chris?
That's great analogy. Yeah, it is like going with the house analogy. So not only do you have to figure out what to do with the termites, but well, guess what? Now you have to replace some of the main joists, some of the foundational pieces of lumber in that home. So well, you might have to take a whole wall out to rebuild it to what you had before.
Right. And you may have to live someplace temporarily while they tend to your house and bomb the hell out of
Hmm.
it to get rid of all the termites, right?
Yeah,
So you're looking at a massive disruption. It's just as bad as anything you've probably seen on TV or in the movies.
absolutely. Yeah, absolutely. Imagine if you had to take your business today, what you're doing today, and you had to completely rebuild that or have it rebuilt. So you're offsite. Maybe you have to be offsite. You have to have all new software, all new hardware. You have to try to get back some of the data. Maybe you have proprietary data, or maybe you don't. You have to get back all of that data that was lost, those emails, everything has. You have to get all that back to be up and running. Well, what's that going to do to your business? What do you make? And sort of a back of the napkin, really easy back of the napkin calculation is, what do you make a year and divide that by 356 days or 65 days. And then that's your per day cost and what just the business interruption, that's what you could lose if you're down for a day. Well, then take that and assume it's probably going to be around 2 weeks, really, that you're going to have diminished output. Well, okay, you just lost that income. You still have payroll to make. And on top of that, you have the extra expenses of having to rent or use a different space, as well as all different hardware and software solutions. That,
And you can bet you're going to have overtime labor costs. Like I read
mhm.
that DLA Piper had something like 15,000 hours of overtime that they had to pay its IT staff as they scrambled every hour of the day to try to do the restoration. I mean, so just that cost alone was enormous.
Yeah, you have some forensic specialists that are, they're billing out 250, 300, up to $400 an hour. So, some of the, depending on the size of the policy you get and the limits, it's all variable. But let's say even at $10,000 annually or $5,000, you're going to blow through that. That's a full day at work.
Yeah, for sure. Now, so that's sort of like what's at stake, right? I mean, you've done a nice job of helping us understand, like, if you have the need for data or for cyber liability coverage, like, this is kind of the disruption. This is what it might cost. Um, are the premiums for cyber liability policies really steep? Because that's a lot of coverage.
It's a lot of coverage. That they are, if I'm being frank, I think they're just silly. They're
Silly expensive or silly inexpensive?
silly inexpensive. I mean, if you look at any of the large losses that have happened in the last year to 2 years, the Home Depot, is the Alaska Airlines, Target, Experian, any of those. You look at the costs associated with that, it's they're far outweigh the expense. If you're spending, and typically sort of a rule of thumb, you're going to look at between 1 to 3% of your firm's annual sales. That's what it's going to cost you to have that insurance. So let's say it's $5,000 or $10,000. You're getting $1 million of coverage. You are transferring really over $1 million of risk over to that insurer, and they're saying, well, maybe just give me $5,000, give me $10,000, and I'll go ahead and take on all that risk and all the headache that comes along with that.
That
Wow,
seems pretty good.
that's impressive.
Do you think the premium costs are going to stay the same, go up, or go down in the future?
If I was a betting man, I would say that they're going to go up. Insurers, there's a lot of competition right now, which is really good for you as the consumer. right? Because you're able to go out there and have your pick. They're all trying to compete. They all are trying to compete on both the forms and the coverages, as well as the price. And so that definitely, it's a buyer's market right now. But there's only so long that all those insurers are going to have an appetite for this. After they start having the losses start coming in, that's when they start looking at it and saying, well, they are in a business. So is this going to make sense as a business when we're losing $100 million and we're only bringing in 90 million in revenue? We're losing 10 million a year. These are just made up numbers, but I mean, it illustrates the point.
Yeah, because I think from my perspective, I see the cyber risks getting more intense. Some of the projections from different forecasting and research firms, like $6 trillion of global cost to cyber failures and cyber breaches by the year 2021. So the estimates of the damages are going up. I can't see any reason why the cost of insurance wouldn't go up, because the claims volume, I would think, would go up. I mean, that. Right?
Yeah.
I mean, doesn't that pencil for you?
Yeah, it's pretty simple. Pretty simple math. As there are more claims, so the volume increases as well as the overall cost increases. You're going to see the rates go up, and why that benefits clients or insureds at this point to purchase a policy. If you have a track record with an insurer, you're going to have a much easier time negotiating a lower rate at the renewal than you're going to have coming in and saying, well, I'd like to get a policy. And, well, they just increased their rates. They don't have a track record. You don't have a relationship. They're going to say, well, this is our current rates. If you don't like it with us, you can find someone else.
Yeah.
Well, and there's 139 others who will insure you. So,
yeah. Well, and depending on whether they'll actually process your claim when you file it too, right? Because that's the other thing, is you could buy insurance like as a box checking exercise, right? To prove to a major customer something. Yeah, we're covered. And you buy a bargain basement, bottom of the barrel, cheapest insurance policy you can find. But if you ever have to actually file a claim, I mean, Chris, would you be worried?
There are some. Yeah. Not all insurers are created equal. So there are some insurers. Yeah, I just personally would not recommend or suggest. Of course, I won't get into that here, but some insurers are just prone to dragging their feet a little more than others, and to whether they deny the claim outright or they try to negotiate it down, and they say, well, we don't believe this expense is covered. I mean, there are all sorts of tactics that some insurers, maybe the less reputable ones, will use to artificially deflate or lower what should be paid in a claim. And I'll try to stay away from fancy insurance jargon, but indemnification is the word, and it means to make whole again. So the damage that you had from a claim that you're paying insurance premium in advance for, you should be made whole. They should pay you exactly what it takes to get you back to where you are. And not all insurers have, as we'll say, as generous a view on that as others.
Okay, so that's something to watch out for. And we've kind of talked about, reputation is something that a broker can help you ascertain. Mm-hmm. So as we come to the close of our episode, I was hoping, Chris, that you could break down cyber insurance coverages. I mean, what should you be looking for as a buyer? Just broad strokes, what kind of coverages should you be sure that you're considering?
Well, it breaks down to there's first party and third party coverage. So third party is everyone else. It's typically going to be harder to prove that damage was done to that. They're going to have a hard time proving damage was done to them because of your company. That's great to have, but really the first party coverage where it's all at, because that's what's covering you and your business. So lost business income, the insurer provides assistance in getting you back up, system restoration, as well as a lot of the insurers, they're really invested, and they have benefits for your IT department to help your IT department both identify risks in your current setup, as well as training them to become even more proficient. And it's really in everyone's best interest to do that, because they have less claims and you have a more sophisticated.
So that's kind of a preventative benefit.
Exactly. Yeah. And it all comes down to an ounce of prevention versus a pound of cure. If you sleep on this and wait for it to happen, we're seeing it more and more, and it's trickling down, not from the big guys down to the middle and the smaller firms. It's not a question anymore of if it's going to happen. It's not a question of if, it's a question of when. When is it going to happen? Because it's going to happen at some point, and you can you want to be prepared for it. You want to have a plan, whether you're spending the money on insurance or you're spending that same amount of money on hiring the appropriate specialists and services to harden your system. You need to pay attention and actually do something about it.
Thank you, Chris, for the summary.
I agree very much so.
My pleasure.
So, Chris, thank you so much for being our guest today. Where can people learn more about you and your company and what you do for them?
Thanks for asking. You can find me on LinkedIn, Chris Brumfield, ChrisBrumfield, or you can also email me at cbrumfield, BRUMFIELD @bbseattle.com, and I'd be happy to answer questions and just make sure you're taken care of.
I'm really happy you were here today on this episode, Chris. And that wraps up this episode of the Cyber Risk Management Podcast. Today, we took a closer look at how cyber liability insurance works as part of your overall cyber risk management plan. And again, our guest was Chris Brumfield. Thanks. We'll see you next time.
See you next time.
Thanks.
Thanks for joining us today on the Cyber Risk Management Podcast. Remember that cyber risk management is a team sport and should incorporate management, your legal department, HR, and IT for full effectiveness. Management's goal should be to create an environment where practicing good cyber hygiene is supported and encouraged by every employee. So, if you want to manage your cyber risks and ensure that your company enjoys the benefits of good cyber hygiene, then please contact us and consider becoming a member of our Cyber Risk Business Strategy Program. Find out more by visiting us at cyberriskopportunities.com and newmanlaw.com. Thanks for tuning in. See you next time.